What can you tell us beyond those big subscriber numbers about what drove the growth?
Well, so the big subscriber numbers, that was a huge, huge beat, way past what they had forecast, what analysts were forecasting. The key thing to note here, though, is that they're now saying going forward, they only want to give forecasts for the net paid ads and not just the total. So, in other words, you can subscribe to Netflix, you get a free trial, and then you might stick with it, you might not. So that's the bigger number. They want to start giving the slightly smaller number. That's because they feel that that's going to be the more accurate forecast going forward. You see the stock going up and down based on those subscriber forecasts much more widely. So they're probably hoping they'll give you a more accurate number that, you'll see fewer swings, even though, of course, today's swing looks pretty good for them.
John, what do you make of the fact that they're able to miss their own subscriber growth forecast so significantly over the last two quarters? Is that a good thing or a bad thing?
Well, I think the point that he just brought up is really key, and I'm interested to hear this during the call, of how much of that beat on the subscriber growth is coming from non-paid subscribers. I think that's why the stock is off a little bit from its high. The big key on the number here in terms of the blowout number on subscribers really is on the U.S. side, because the U.S. subscriber came in at over 1 million subs. They were forecasting 650,000, and presumably the U.S. subscriber is a higher average revenue per user. So let's get more detail on the conference call.
Ross, you're a fan and a shareholder. You like what you hear?
I love it. It's validating our premise that we've had for a long time, that the world has so many potential TV viewers, and Netflix has the best overall content of any company in entertainment. And when you really look at what they've done, it's really just incredible. And certainly Reed learned his lessons the last few quarters, so he underpromised this quarter, and he's getting a big benefit from doing that. And I think the most important thing is when you look into Q4, they have just amazing content coming out. And as they continue to do this, they'll continue to gain millions and millions of subscribers every quarter. So we're very excited. Great job, Reed and Ted. They did a wonderful job.
Ed, just in the lead up to these numbers, you had a lot of analysts either reducing price targets or reevaluating exactly kind of how fast Netflix can grow with regard to kind of needing to burn more capital for the content. They can stay on this treadmill as long as Wall Street allows them to. I guess the question is how long that is.
So you hit the nail on the head. I mean, if we think of Netflix as getting to 300 million subscribers, they're not even quite halfway there yet. That's what everyone's buying into. So any fluctuation in that subscriber ad, the actual paid subscriber ad, that's going to sort of affect the stock. Aside from paying for the content, the big cash burn, the other thing, I don't know if you want to take a quick look here, but the other thing to look at in their note, they're talking about, they have a new thing in there showing Instagram followers for their stars before and after their show's launch. What they're trying to do is they're trying to let Hollywood know, look, you're not going to get buried on our screens. It's a good place to be. It's a way of marketing, right? If you are discovered on Netflix, you'll be discovered on Instagram, and you'll have a much bigger career path going forward. So it's not just about spending for content.
Instagram too.
Right.
I think there's more to it. I think there's more to that too. One of the things I think that people have to start preparing for is Netflix as an advertiser and putting advertising in the platform somewhere. And maybe that's why they're showing these Instagram metrics.
Albeit that could be a risk to subscriber numbers, given that they offer something so different to traditional broadcast television. John, coming back to you, what do you think, John, about the level of threat of competition that's out there? I mean, clearly Netflix has a big first mover advantage, but is it about to get a lot tougher for them, given some of the other offerings that are due to come out?
Yeah, I mean, listen, when the stock is trading at 77 times EBITDA and 70 times forward earnings and 10 times price to sales, and has a market cap that's close to Disney, but yes, has a fraction of its total sales at $15 billion, guess what? A lot of good news is really priced in. Them getting to 300 million subscribers is there. The idea that new competition is coming on and is not going to disrupt this great ecosystem is not baked into the cake. This is about one story, and it's about the subscriber growth. And if subscriber growth comes in less than these very high elevated expectations, the bull case for Netflix becomes a house of cards, no pun intended.
So, Ross, one question for a bull. How do you justify the valuation when people ask you if they should buy it? I mean, it's trading now more than 150 times earnings.
So what we think is happening right now with the sort of demise of Facebook and the sort of pressure on Google and social media companies is that eyeballs have moved to video games and Netflix. And video games already have a certain ad business that's growing very rapidly, as well as their consumer products. But Netflix doesn't have one ad anywhere in the platform. And we think that they have a business not in the shows putting ads, because people won't want that, but in the feed. And I think if they put ads in the feed, kind of what Amazon's doing in the future, I think Amazon and Netflix could be huge advertising vehicles for various different properties. And think about the eyeballs, 130 million global eyeballs, what that's actually worth when you get past subscribers. So if you look at the cable model, we used to all just pay for cable and there was no ads originally. And now when you buy ESPN, you get to pay for it and get ads. So I think that day is coming versus higher and higher subscription prices.